folks, this is Rob Reinhold. This is the Trading Room, and look at that date. I cannot believe that we are already done with half of the year in the books, but let's look forward to the next half of the year. Let's take a look at what we're going to be talking about in this session. We're going to be going over the previous week. We're going to go over the news of the week, and then we're going to take a look at the numbers, what happened, and break down last week. Then we're going to look at the current market analysis to get us ready for the next week. We're going to take a look at technical analysis of the broad markets, give scores, and then we're going to break down every sector and give each sector a relative strength or weakness score. And then we're going to talk about some of the major news events coming up this next week. And after that, we're going to go through trading setups. We're going to take a look through every sector and take one trade in each sector, and we're going to build trades and talk about entry points. Hello, welcome to Maverick Trading. We hire traders to trade with the firm's capital. The traders get to keep 70 to 80% of the profits they generate for the firm. Profitable traders earn more and more capital. If you're interested in being a trader for Maverick, click on the links in the video description below. We welcome you aboard. Now on to the content. So let's start off with last week's news. Okay, so last week was an up week. It was an up week. All the markets went up, and small caps actually outperformed for the first time in months and months. They've been lagging quite a bit. So again, we've been talking about how the Qs have just gone crazy. They're up like 38% for the year, and everything else is like around 8 to 15%. And we talked about how either the Qs have to come down or it's going to pull everything else up. And sure enough, that's what happened this week. The Qs pulled up the small caps. We have heard from Powell again. So we heard from the FOMC 3 weeks ago, Powell last week and the week before. Every week he's been saying interest rates are going higher. Here's the crazy thing. Interest rates aren't going all that much higher. We're going to take a look at a chart of the 10-year bond here and talk about what this means for the markets. And we continue to get amazing economic news. So let's take a look at the news we got this last week. First up on Tuesday, look at these numbers. Core durable goods, way above expectations. Durable goods, way above expectations. Manufacturing index, above expectations. Consumer confidence, above expectations. New home sales, crushed. I mean, that's an absolute crushing of the number. And then we check on Thursday. What did we get Thursday? We got GDP of first quarter was revised up to 2%. This is a 2% economy. This is actually very, very good. We got unemployment claims that actually dropped quite a bit. That pending home sales number is actually a curious one, and I heard them talk about it on CNBC on Friday, is that new homes are flying off the shelves, and existing homes, the problem is no one's selling their home because everyone's locked into 3% mortgages. It's very difficult to sell a home in this environment. So lots of new houses selling, existing houses not as well. And probably the most important one we got this week, and the reason we got the big jump on Friday, was the core PCE price index came in right as expected. That's exactly what the market wanted, and that's coming down year over year. So all of that news really just gave credence to the market run that we've seen lately. These numbers are confirming that the market is correct in the big run that it's had. And it kept running this week. Dow up 2%, S&P up 2.3%. And look at that. Oh, the poor Qs only up 1.9%. They underperformed this week. I expect we're going to continue to see this. The Qs probably still go a little higher, but we're going to see the rest of the averages probably do better. Small caps almost up 4%. Oil 1.4%, gold flat on the week. Let's break down these charts and really take a look at where we are in these cycles. We got bullish on this breakout here. Came back down a little bit. We came up high based. Then we got this parabolic move. Very strong move to the upside. And right up here we said, okay, probably time for a little pause. It paused a little bit. And in the trading room last week, I said, look, we have to get ready to buy. At some point, we're going to get a great buy signal, and that signal happened on Tuesday. Tuesday was the signal saying, okay, time to get long, and you can see it was a great signal, and we closed right up here at resistance. Going forward, look, I don't know if we're going to break out and run. We sure have a lot of momentum. It wouldn't surprise me at all. And it also wouldn't surprise me if we hit this level and backed off a little bit, maybe back down to this 20-period moving average before we took another run at this resistance. Either way, both of these scenarios are bullish. The only thing I'm not totally sure about is what happens the first couple of days of next week. Do we just break out and run, or do we bounce off this level, consolidate for a couple of days, and then break out and run? We'll have to see. But if you have at least a 5-day time horizon on trades, I don't think it matters. The clear trend is higher. Coming over here to the Qs, same thing. These have been much more bullish for a lot longer time. Run up, high base, break out, pull back. Same thing here. You had to be looking for a bounce, and sure enough, we got it. Okay, it's not back to the previous highs like the S&P is. That's fine. We didn't expect it to. We've been talking about how the Nasdaq probably underperforms. So it's underperforming a little bit. It doesn't mean it's bearish. Everything in this chart is still quite bullish. So you have to be bullish stocks. The charts say you must be, even if you don't feel like it. Even if you don't feel bullish and you don't feel like inflation is under control. I don't care what you feel. The charts are telling you to be bullish, and they've been telling you to be bullish for the last 2 months. I wanted to take a look at this chart. We always want to talk about what could potentially cause some problems here. So everything's looking bullish. Everything's looking great. The 10-year bond has actually been quite tame, which has really helped this market go higher, is that interest rates aren't skyrocketing higher. I mean, the Fed has told us there's 2 more rate hikes coming, and the market has said, we don't care. Who cares? And again, the bond market hasn't moved at all on the news. As you can see, we're starting to push out a little bit. So we're finally starting to push out of this resistance, and it looks like we are going to make a run up to 4. This could cause some problems for the markets, and specifically technology. Look, we've been at 4% before. It wasn't that big of a deal, and the market will get used to it. But as we look out on the horizon and say, okay, what could possibly get this market a little bit worried? And that would be higher interest rates for tech and the growth stocks. However, this is actually quite good for things like financials. So it doesn't mean the market's going to crash. It just means there might be a little bit of a rotation out of tech and high growth stocks into some more value stuff. So this week, look, we think the market likely goes higher. July has been the best month for the last decade. So Julys have been the best month of the whole year. We don't know if this is going to be the same this year, but historically speaking, Julys have been very strong. When we look out in the horizon of what could possibly go wrong in this rally, there's really not a lot we can see. And we started saying that 3 weeks ago, once we got through the Fed meeting. There's just not much left to worry about. This is a holiday week. The markets are going to be closed on Tuesday for the Independence Day holiday in the US. So Monday's a full day, Tuesday's off, and then Wednesday through Friday. And I am going to keep an eye on those rates. I think if there's one thing that you want to, again, I don't think is something to worry about, but there's something to pay attention to right now. If there's anything that's going to sink this market, it's that interest rates spike up substantially and causes the market to have to rethink its valuations. On the calendar this week, on Monday, we've got ISM manufacturing. So that's going to be a big number. This is one of the only numbers that hasn't recovered. It is forecast to recover this week, but it's still below 50, which is a contraction. We're likely going to see a slightly better than expected number here. The market is already planned for a good number. I don't see Monday being spectacular with the holiday being closed on Tuesday. And then on Thursday, we get ISM services that, again, has come all the way down to 50. This is one of the numbers that has stayed strong. It started to come down. It's supposed to tick back up to 51.3. And then it is the first Friday of the month, so that means we are going to get the payrolls report, reporting how many jobs were created, unemployment rate, and average hourly earnings. The market is pricing good news for all of this. And bad news, think about it. Bad news is actually good news here. Let's say that the report on Friday comes out lower than expected. Do you know what that means? The Fed probably doesn't raise interest rates as much as it's going to. I'm telling you, I don't see any bad news that's actually going to dent this market, because bad news is actually good news. What could dent this market is spectacular news. Could cause the market to start to worry about the Fed getting overly aggressive again. I don't see that happening. So any number that comes out lower than expected, I think just bounces off this market, because people are going to look at the number and say, oh, good, the Fed's going to be less aggressive. That's bullish. So here we are. We're at a +3. We've been at a +3 all the way since the middle of May. And I've got a +1 for the week. I think we creep up this week. I see no reason why it's a down week. It could be a down week. I have no idea. but I just see this market creeping higher. We could hit that resistance I talked about a little bit. And if we hit that resistance, it's likely going to be short-term in nature, where we just come down for a day or two. I see no reason why we don't break out this week or next to some new highs here. Let's take a look at all the sectors one by one and score them with our scoring system. Let's take a look at the sectors one by one, but first let's check in on the performance last week. As you can see, the consumer sector continues to be strong. I talked about this last week. I said, look, I don't want to be this bullish in consumer. It's already had a big run, but when I take a look at all the charts, it's clearly the best one. So I have to stay long. It was a fantastic one again this week. Real estate up 5.1%. Don't get too excited. Real estate was literally down like 4.4% last week. It just simply recovered what it lost last week. We'll take a look at the real estate chart. You'll see that it went from +1 to -1 to +1 in a week. It's neurotic. We're just going to score it a 0 until we can figure out a clear trend on it. Energy had a good week. It's been one of the weaker sectors. It had a little bounce. We'll take a look at it. Materials. This is one of the sectors that really improved this week. So I really want to be diving into some good trades on materials here. And let's take a look at the underperformers. We've got healthcare. We got comm services and utilities. Now look, healthcare has been underperforming for a while. Healthcare is a defensive sector, so it doesn't surprise us at all that it's underperforming when the market's running higher. Utilities is a defensive sector. Not surprising, it is underperforming. But take a look at this comm services. This is one that's been red hot, been doing very well, and you can see it underperformed the rest of the market. Now look, when something goes up 1.6% in a week, it's hard to say it's underperforming. Look, by no means is this bearish. I just want to point out that where the momentum is kind of leaving and changing. Technology was one of the sectors we downgraded last week from a +3 to a +2. It actually had a better than average week this week. We'll take a look at it on a chart and see if we're going to bump it back up. So let's take a look at this utilities chart first. So on utilities, last week we were at a -1. This week we are still at a -1. So here we are. It's still down below the moving averages. It had a bounce at the end of the week, but we still think you want to be sideways to bearish on utilities. Next up, communication services. Okay, look, it had a good run. It had a fantastic run over the past 3 to 4 months. We had our pullback. We had our bounce. Look, it just isn't as strong as other things. It's still a +3. You can't say that it's not a +3. Everything is moving higher on this one, so we're going to have to stay at a +3. But we can note that it is starting to be not the best +3. It had been the best +3 for months, and now it's maybe middle of the pack +3. Next up, real estate. Here's what I was talking about. Real estate last week, up here. Bam. Oh, sorry, 2 weeks ago, all the way down here. And then here we are right back here. Look, I'm not going to go from +1, -1, +1. I'm just going to say, I don't care right now. I'm going to score you as a 0. Until you break out of one of these ranges, I don't care. You're just going nowhere. And the volatility, I don't need to worry about. Next up, industrials. This is one of our favorite sectors. We had it at a +3 last week. Look at that. We broke to new highs. So when we're taking a look at relative strength, remember the S&P is at its last high. The Qs aren't even quite to its last high. Utilities are past it. So utilities is one of the strongest ones out there. Let's go next to healthcare. Boy, healthcare last week was a 0. I've got to bump it up to a +1. I'm not totally convinced it's out of this channel yet. Give me one more candle out of this channel, and I'll be a little bit more bullish, but to me, 0 to +1 here on healthcare. It's the best I can be. Financials. Last week, I downgraded financials from a +1 to a 0 because it warranted it. Financials had a bigger gain than the markets, and you can see we're right back up to this high. So this is at least a market perform. Remember, last week, it was a 0. We're going to bump this up 2 to a +2 this week, because again, that's what the score warrants. I really like financials, especially if the interest rates start to creep up a little higher. I think there's going to be some great rotation into this sector. The banks also passed the yearly stress tests last week. Very bullish news for them. It was expected, but it was one of those, again, worries that you can check off the list. I no longer need to be worried about bank solvency. Here we are, consumer discretionary. Last week we're at a +3, and look, just like just like industrials, we are above our previous high. So this is stronger than the market. Relatively, this is way stronger than the market. Technology. Last week we downgraded tech to a +2 because it warranted it. It came back down all the way to the 20-period moving average. Not a lot of other things did. We can see we're not back up to the previous high, but it's still a +3. You still have to be really bullish here on tech. It's just, again, it used to be the best. Just like comm services, now it's in maybe the lower group of the +3. Industrials and consumer is doing much better relative than this. Materials came to play last week. They came to play. They're getting an upgrade from +1 to a +2, and this thing is taking off. All we're waiting for is this 50-period moving average to turn up. That's going to move us to a +3, but you can see we are above where we were. And the last high is telling us that this is one of the relatively stronger sectors in the market. And here we have energy. All right, I'm going to bump energy back from a -1 to a 0. Look, it's still more in a downward trend than an upward trend. So again, 0 to maybe -0.5 or -1. We'll have to see what happens, but you can no longer be ultra bearish here on energy. It just isn't warranting it. This is where we were sitting last week with consumer, industrials, comm, services all at +3. Look, they all stayed at a +3, but we got two sectors that were bumped up by 2. Materials and financials all bumped up to a +2. Now that is important to note because when something goes up 2 spots, that's showing it's relatively stronger than the rest. We also got 3 sectors move up. Technology moves back up to a +3. Utilities and real estate, okay. And then look, we got energy and healthcare moved up as well. As you can see here, everything's pretty bullish. Utilities at a 0, -1. Look, it's just a matter of where you're going to find your trades. Tech, consumer, industrials, comm services right now are looking great. Materials and financials are getting more momentum than even these +3. So I think there's 6 sectors out there you can find a lot of good bullish trades in. And I'm actually going to be focusing a lot on materials and financials this week. And then the rest, healthcare, maybe take some bears or sideways, real estate, bears or sideways, utilities, energy. I think that makes sense where you want to take a look for your week trades. So speaking of trades, let's jump into our trades for last week. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. We've been switching between utilities and real estate. Last week we did a trade in real estate. We did a bearish trade on AMT, American Tower. American Tower was up 4.2% last week. However, we've got a 185-190 spread. So look, this thing did move out of our range. We are now up here at 193. This trade has 1 week left. If this turns down, we could still get maybe a break even or a small gain. We'd have to get a huge breakdown for us to get a max gain. The trade doesn't look great at this point. That being said, it hasn't really broken any technical areas. We haven't broken out of this resistance line yet. There is a possibility we could get a move down, but at this point, this trade is looking like a loss. This week in the utility sector, we're looking at PPL Corp. This is a utility company, and really what we're looking for is a sideways to bearish. Remember, utilities is like a 0, -1 kind of sector. So we want to try to mirror our trades to the sector performance. So I'm looking at this 26 level. This 26 level saying, okay, I've got to pick either 26 or 27. Where do I think it most likely to be by the end of the July monthly options expiration on the 21st? And I think it's going to be a little bit more bearish than bullish. So I'm looking down here at this 26. So I'm simply going to open up a 25, 26, 27 butterfly, which means that I need it to hang out in this area. If it hangs out in this area, it's going to be profitable. If it moves out of that area, it's going to be a loss. If you want to play this a little bit more bullish than bearish, then pick the 27. You do the 26, 27, 28. And if it floats up into this area, it's going to be a nice profit for you. That's a great thing about these trades. You get to pick where this target is. So this is PPL on a sideways to slightly bearish. Last week in comm services, we had a trade on Meta. We had a vertical spread, and you can see Meta did okay. It hung in there. It didn't go up. We have one more week on the trade. We just need to get this stock above 290. Above 290, this is a max gain. Not asking a lot. If we have a slightly bullish week next week, this trade should be at max gain. This week, we are looking at Google. All right, now look, at least me personally, I typically don't trade these large cap tech stocks. One of the things I always worry about when we get a new trader in here and they're only playing Tesla, Google, Amazon, what I know is they're not using a screener. I know that because these don't pop up every day on the top of a screener. We love to use screeners at Maverick where we say, hey, this is what we're looking for. These are the parameters we're looking for in a stock. Deliver me this. And then it delivers you a list, and that's your list. So whenever I see traders just trading large cap tech and that's all they trade, it's telling me they're just picking from a small list of some stocks they're familiar with. It is definitely a very elementary way to trade. We have scanners, technology to do all the work for us, hand deliver us trades that are optimal. Google ended up being in the list of the scan that I look for. So here we have a bull pullback. Here we are. I'm looking at a 120, 125. So I'm not asking the stock to do much. Looking at a 120 to 125. I just need this stock to be above 125 by January 14th. So I'm giving it 2 weeks. It doesn't even need to break out to a new high. It just needs to move above this 125 area. Pretty wimpy trade on Google, but it's got some good risk reward to it. In the healthcare sector, last week we had a trade on Dexcom. We had a vertical spread on Dexcom and it was up nicely, up 1.4%. This trade needs to get above 130 for us to have a max gain on the trade. As you can see, it's working our way at this point. We still have more time on this one. This week, we're looking to be sideways to bearish. Again, this sector, healthcare, we did get bumped up to a 0 to a -1, but compared to the rest of the sectors, it's still relatively weak. So how do we want to play this? Remember, we don't want to be short, heavily short anything here. There's no reason. So all of our bears are going to be very neutral and with delta, and we're going to be counting on a lot of theta. So we're liking these targeted butterflies. So we have got looking at the 110, 115, 120. So that means that we're looking in this range. We're saying we think this stock is going to drift down into this range, and by July 21st, it's going to be trading in this area. That's all we're doing with these targeted butterflies. We really like these because these targeted butterflies, it's a $5 spread. You can get into these for $1, which means you have a $4 potential reward. Now look, you're never going to get the full $4 on a butterfly, but you could easily get $3 or $2.50. The rates of returns are fantastic when you hit these targeted butterflies. So that is the trade here on Agilent. Moving into industrials. Industrials were one of our favorite sectors. Last week, we had a bullish trade on Delta Airlines, up 4.7%. I know I took my profits. I'm moving on to the next one. This week, Copart. Copart is in a nice high base here. You can see we had a huge run in May, and it's just cooled off. It just cooled off for a bit, and now we're starting to poke our head above this 1.5 month base. These are usually typically great trading patterns. So the question is, how do we want to play it? Well, you can play it any way you want. You just want to get positive delta. But you could go crazy and just go with like straight calls. This is going to be all delta and negative theta. Or you could kind of say, hey, you know what? I want to be aggressive, but not that aggressive. I'm going to do a vertical spread, which is a little bit less delta, but not as much theta against me. Or you could do a diagonal call spread and say, hey, you know what? I'm going to do it to where it's a little bit of delta and I get positive theta. So if it goes nowhere, I still make money. That's the one I'm going to choose to go with, the August 90, July 95 diagonal spread. That one is going to be a longer trade for sure on this one. Moving next to the financials, this is actually my new favorite sector. Ooh, it's tough. Between financials and materials, it's tough. I like both of them. Last week, we had a sideways trade on Coinbase, and Coinbase had a great week, up 16%. Now look, when you have a sideways trade on a stock, even a high volatility stock like Coinbase, we definitely did not expect a 16% run. Cryptos had a very strong week for the week. Bitcoin Cash went up like 80% this week, and it went up 60% last week. It's going crazy. So look, we had a big run up. 58 is our middle point. And I want to say that we are up here to 66 down to 50. It needs to come back down into this area here. Will it come back down in a week? We don't know. This is a very volatile stock. If there's any sort of sell-off in cryptos in the market, this could absolutely turn into a profitable trade. I don't think it's going to. This thing has moved really far out of our range, but this is the great thing about butterflies. We position size it for max risk, and we just let it do its thing. I've had trades that look terrible a week out, and by the end of the week on Friday, I'm profitable. And I'm like, oh, look, I didn't even have to panic. I didn't even have to get out of it. I didn't even need to have a stop. I just let it do its thing, and it came right back in to my zone. This week, I want to get more bullish here on this sector, so I'm looking at Berkshire Hathaway B shares. I have a bull pullback, and you can see just a really nice bull pullback. Everything's great about it. Bull's back. We get our confirmation candle. Today's candle was nice. Okay, we hit a little bit of resistance here. If you're worried about this hitting resistance here at this area, then it's pretty easy. You just go to a diagonal call spread. Diagonal call spread is you get a little delta and a little theta. So if it keeps going higher, you make money. You just don't make as much money. If you want to be more directional, I think a vertical spread is the way to go. This stock just doesn't have enough volatility for me to justify a long call. So this is about the most bullish I'll go here. The July 14th, 340, 345 bull call spread. Moving into consumer. Consumer was awesome. Last week we had a trade on Ross Stores. Ross Stores blew through resistance up 2.99%. Very nice trade. I know I closed my trade out. It was a diagonal call spread. So I closed my trade out for about a 23% profit for a week. And I'm just going to look to reinvest that somewhere else. This week, Amazon looks good here. Nice high base. It's just hanging out there. Same thing. The question is, how do you want to play this? If you want to be ultra bullish, you can buy long calls. If you want to be moderately bullish, you do a vertical call spread. If you want to be mildly bullish because you're worried that this 130 is going to act as resistance, then it's very simple. You simply do a diagonal call spread. Now look, you can do a diagonal call spread at the 130. I chose to do mine at the 135 up here. So I'm asking my diagonal call spread to be a little bit more bullish, getting more delta. But you guys know how to put your options trades together to make it to where you're getting the right amount of delta that the chart is showing us. So look, it might go sideways for the week. If it does, a diagonal call spread is a great choice. If it blows higher, then the vertical call spread was the better choice. But look, you're going to make money on both, so it doesn't really matter. It just matters, did the stock move higher? Technology got bumped up. Last week, I took a short in Fastly. Now, if you remember last week, I talked about how I have a lot of long positions in technology. I have a lot of long positions in technology, and I don't want to add on any more long positions. And in fact, I wanted to reduce some delta. So I said, hey, I'm going to take a look at a negative trade here, a negative delta trade or a short here. I did a bear call spread, and Fastly was up a little bit on the week, up about 1.5%. This trade ended up being a moderate loss. It wasn't a max loss. It wasn't a tiny loss. It was a moderate loss. It was a 14-16 bear call spread. And you can see it closed up near the top of our range, close to where it would have been a max loss. I'm going to do the same thing this week. I still have a lot of tech. None of my tech has stopped going higher. So I'm very happy to let it go higher. I'm going to do the same thing here. I'm going to add in a bearish trade, reduce my overall delta in the sector in case there is a pullback, and I'm looking at First Solar. This has been a weak stock. It's having a nice little bear rally here. Just need to wait for it to turn. And the question is, how much delta do you want to get? Right now, the stock's at 190. You could do a 190, 195, and that would be a little delta, but mostly theta. So if it just hung out here in this area, it would be highly profitable. You could do the 185, 190, which is what I chose to do, where I wanted to get some delta. So I'm going to need this stock to move down below 185, and I've done it for a week. I'm just looking to do short delta plays to hedge some stuff out for a week, and then I'll probably keep doing this until my overall long technology delta has been reduced from taking profits. Materials, another one of my favorite sectors this week. It jumped up 2 spots. Last week we had a sideways trade on LYB because the sector was telling us to be more sideways. This week is telling us to be more long. Last week, LYB was up 4%, but 90 is our midpoint on our butterfly. So look, we have the 90, 95, 85 butterfly. It is well within our profit range. Our profit range is right in here. It looks fine. So as long as this thing doesn't break out and run and go crazy, we're going to be very happy with it just chopping around in these areas. We do want to get a little bit more bullish here in this sector, so we're going to add on a bull here. This is Lithium America. Great looking stock, was already strong before the sector got strong. Had our pullback, as you can see here. Same thing, we're right up at this resistance here, right around 2750. Right around 2750. So how do you want to play it? Again, I like the bull call spread. You could do a diagonal call spread, but I just want to get some delta on here. This is going to give me some good delta. It's 2750, 29. There is a 30 strike that you could choose if you want to be even more bullish, but I'm going to be moderately bullish. I'm looking at 29 up here as my target. I'm not asking this thing to do too much. And I'm giving it 2 weeks here on this trade. Energy did get bumped up, but it is still one of the weaker sectors. Last week we had a sideways trade on Range Resources, and you can see here, Range Resources didn't move out of its channel, which is exactly what we wanted. The midpoint on our trade is 28, so 28 is right about here. Okay, so you can see, this is probably our profit window right in here. It's moving a little bit outside of it. Okay, not a big deal. If it blows past this point, yeah, this trade's going to be a loss. If it hits this point, drops back down, this trade is going to be quite nice. So this thing still looks okay, looks fine. Butterflies, you don't really know where it's going to be until the last week. And then you have a profit or you have a loss. That's how these things work. This week, we are going to be slightly bearish here on PSX Phillips. This has had a big bear rally off the bottom. Now look, we don't want to be super bearish this. We just want to be moderately bearish. So I'm going to be looking at this diagonal put spread, looking at the July 28th, 98, July 7th, 95. Risk graph on a diagonal put spread looks something like this. 25 is my max gain point. So as you can see here, if this thing rolls over and dies, I'm going to make a little bit. I'm going to be profitable down here. If it hangs out at 95, this is going to be very profitable. I'm really going to like it. And as long as it doesn't blow higher and make a run towards 100, I'm going to be quite happy with the trade. So this is PSX sideways to bearish here in the energy sector. That wraps up our trades. If you have some trades you want to share with the rest of the Maverick group, you guys know where to go. Log on to the website, go into the members area, and we always love to see all the chatter, all the camaraderie going on there in the forum. Let's wrap this up. These are bullish market conditions. The market is closed Tuesday, so expect Monday it could be quiet. There could be a lot of people that are turning this into a 4-day holiday weekend. It could be quiet. Not a big deal. We think that overall the market likely goes higher. And as always, just focus on where the money's going. What sectors are getting the money right now? What sectors strengthened? What sectors weakened? That's going to tell you where to put your most bullish and your most bearish trades. Have a great weekend. Thanks for joining me. Goodbye, everybody.